to be free in terms of any question that that you may have for Paul or any of our team members here. Shreya, can we move to the slide? I'll just take 3-4 minutes to set the context here to the larger group and then hand it over to Paul. Clearly, I think this is something which we all have known and are in the thick of things. 5 big themes that we are seeing as KPMG in India. I'm sure Paul will also add on to the same thing. Having talked to a lot of senior retail CEOs and members, I think clearly you do know this, but quickly to run through channels, the standard channels that we all looked at in the past are now sort of those myths have been shattered. A huge role being played by the online channels as we go forward. Sourcing, a lot of you have sort of talked about a lot of categories coming in from China and supply chain getting disrupted. I think we've also seen a lot of pressure around alternate sourcing and a lot of supplier risk assessments going on right now. A lot of them as requests to us. In the past, it was very easy to look at customer buying behavior and build demand clusters. A huge challenge now, given the kind of fluctuation that we're seeing around demand, and perhaps a lot more opportunity to use tech tools. Liquidity becoming a huge issue in retail, with the fixed cost being high. It's becoming a big challenge in terms of who we pay, how much do we pay, and how do we manage our debt and cash liquidity positions. And lastly, but not least, the customer which we had before is going to be a very different customer going forward, safe, hygienic buying, and he or she will spend with a lot of caution going forward. A few more interesting things as we go to the next slide, Shreya, is that, and basis chats with a lot of you, I think there are a few things which we thought we should highlight. I'm sure all of you know it again, but things around labor laws, I think questions coming around from a lot of you around what does it mean in terms of keeping employees on your own payroll? What does it mean even if it's a lockdown employee doesn't plan to come into you? I think these are key questions. We don't have standard answers, but again, this is something which has come around as a resonant fact while talking to a lot of you. Contractual obligation, I think this is again something which we believe that it's important that all of you keep in mind. It's important to know when a force majeure claim can be taken into account and what that means, if at all, to who you've leased out properties, etc. from. Not a small thing, but around insurance. What are the obligations around insurance? What are the time durations that you take for insurance, and what are the steps you can take? Very, very critical as you get into it, because you will always be in the thick of things, and it's important to know where, if you need any help around insurance. Lastly, but not least, I think questions also around directors and key officer obligations coming out loud and clear to our teams who are talking to clients such as you. The last slide that I have, which is the next one, is a very interesting one, and I hand it over to Paul, is that we're already seeing some of our European and American retailers talking to us about newer designs of retail stores. As you would see, this one, which has been created for one of the retailers, it's very clearly demarcated in terms of some space which is only for sanitation. There are specific areas only for shipping in, and also some areas in the shipping for pre-set boxes preparation. There is a separate pickup area for click and collect and a separate pickup area for people who come in and walk into the store. So some areas for drive-through mode and some areas for walk to the store. And then I think most importantly, as you would have seen, logistic partners and the partners that get the products to the store, to the homes, a huge slew of them. And most of the retailers, even in Europe and America, are seeing a huge traction around who you tie up with, how you get product to the store, product to the homes. I think this is just something that I leave you with, and I hand it over to Paul for his insights across multiple countries that he's seen and what he's seeing across the globe. Paul, over to you.
Thank you very much, Harsha, and good afternoon, everybody. I'm delighted to be joining you virtually today. And to echo Harsha's words, first of all, I hope that everybody is well and safe at these rather unprecedented times. To Harsha's point, I have been in the very privileged position to speak with leaders within the retail sector across probably 20 countries over the last 4 to 6 weeks, and a number of common themes are emerging. First of all, I'd like to showcase what we believe the 4 key phases of reacting to the current health crises should be. The first phase is, as you can see on the slide in front of you, reaction. And in many countries, including India, you will still be in that reaction phase. And what are we seeing as the key themes during the reaction phase? Well, if you are a non-essential retailer, meaning you have had to close many of your stores, as we have seen in many, but not all markets. And to build on Harsha's points, it has been all about cash preservation and guaranteeing liquidity going forward. It has been addressing challenges relating to your workforce. In countries like the UK, we have seen schemes hosted by the government to furlough your workforce. In markets like Germany, we have seen the government also introduce mechanics to allow shorter working hours or to again furlough the workforce. And the final point has really been all about how do I access the relevant government funding schemes if they have been introduced in the specific country. And in many markets, there has been a lot of queries regarding these government schemes. And I do have a level of sympathy for the policymakers and the relevant authorities here, as in many cases they have been making this up whilst running at 100 miles an hour. If I flip to the essential retail categories, those retailers that are still trading, it has been predominantly around how do I guarantee my supply chain is still working, and therefore how can I guarantee product availability in my stores via my home delivery channel, via my online channel if I'm a non-essential retailer that currently can only operate the online channel. But also in that context, what has been really important has been the safety of both and well-being both of retailers' workforces, but also the safety and well-being of your customers. Those have really been the sort of key points under the reaction phase. And we have now seen, and if I take the UK or Europe, broader Europe as an example, many organizations are now moving out of that reaction phase, which lasted predominantly for the first 4 weeks of the relevant shutdowns within individual countries, into a resilience phase. At this point in time, we are seeing very varied measures related to lockdowns. We are seeing in countries like China, and I'll touch on China in a little more detail in a few moments. We have seen varied lengths of shutdowns. If you take Hubei province and Wuhan, the epicenter of the initial outbreak, we are speaking of a 10-week to 12-week lockdown. In the UK, there will be a 7-week lockdown, but we've already seen markets like Austria, like Denmark, relax certain features of the lockdown, and physical retail starting to re-emerge. But here, it is all about, the next phase is all about the resilience of running your operations in or during the lockdown phase, both for essential and non-essential retailers. And that really is over the course of now, so as in after the first 4 weeks of the shutdown have commenced, all the way for the next 6 months, we believe. And then we will move into recovery and renewal, as it is absolutely fair to say that the current health crisis will leave lasting features on retail that mean we will not go back to life before COVID-19. So certain changes, and many of these changes we have been discussing in retail for a number of years, have been accelerated through the C-19 crisis. And in that context, it is absolutely pivotal for retail organizations, once they hit the resilience period, to in parallel and the timelines I'm showing you here are not sequential, in parallel to already start thinking about the recovery. Speaking to a number of retail leaders over the last weeks, I am joining calls like this all over the world at the moment, and the feedback I have received from many of your peers around the world is it's absolutely pivotal to be thinking about the recovery period. What does life after COVID mean? Basically, after you've really worked on the reaction period, and in parallel you have built and stabilized the resilience of your day-to-day operations. If we can flip to the next slide, please. The next slide really looks at, well, what do we think the key drivers of consumption will be, and how have they been impacted through the C-19 pandemic? And none of these drivers, I would argue, are new. For many years, we focused on 3 key drivers within the retail sector. The first, value. Do I, as a consumer, receive a good price or the best price, good value for money? Is shopping convenient for me? And is there an experience, a wow factor connected with my retail experience? Over the last 12 to 18 months, I would argue a lens of 3 new criteria should be added to this equation. The first being choice. Do I have unlimited choice or a very curated, limited offer I can select from? Purpose. Am I demonstrating to my consumer a specific raison d'etre for operating, and does that match with the values of the customers I serve? And finally, privacy and safety. Can I safeguard the data? Historically, it was predominantly focused on the data of the consumer, but I would argue that safety, physical safety, plays an increasingly important role in this context. So these 6 drivers of consumption were absolutely true before C-19 happened, but I would argue post C-19, this is going to become increasingly important, and retail businesses are going to have to understand which of these levers are they going to pull and are going to be good at, as it will drive consumption decisions of consumers. When we ran a consumer research poll on this topic about 18 months ago, 96% of consumers highlighted that one or more of these factors were the key drivers of making a purchase decision. It is fair to say that in many markets around the world, we will see an economic dip. In a number of markets, a very serious economic recession. And we have seen over the course of many years, but if we take the 2008-2009 crises as an example, we have seen value retail, others would call it discount retail, generally prosper in this environment. So therefore, retailers post C-19 will again have to think about how do they deliver that value equation, whilst at the same time also connect that value equation, as the pure cheap and cheerful discount concept we have experienced for many years does not work quite as well as it used to. Convenience, again, is going to be a really big point going forward. Convenience for a long time was focused on online shopping, but also proximity retailing. In many countries, we have seen a significant growth of convenience stores. But going forward, that is still going to be absolutely important. But how can you make the shopping mission for a consumer as easy as possible? And we would have seen, and this is the data that is coming through from a number of markets like South Korea, like China, online shopping is a clear winner in this context. But how do you also deliver convenient propositions? On a call with Singaporean retailers earlier this week, they highlighted, or one chief executive highlighted, for their physical stores, they have now built a people tracker app, which allows consumers to understand when will the store be busy, and therefore when can they avoid queues in front of the door related to social distancing, and when can they also minimize the risk of congregating with too many individuals within store. Again, I would argue experience has been a key purchase driver for a number of years, but I would also highlight it has been overrated to a degree, or there's been a lack of definition around what does experience really mean. It doesn't mean having a coffee bar in the middle of your store. It is either what is the wow factor, and we have a number of the premium department stores, take Harrods or Selfridges as an example. But another key point of experience is to be able to deliver against certain promises. Are you delivering against your price promise? Are you delivering against your availability promise? Therefore, if you are saying certain products are available, think of online delivery. How big a percentage is your substitution rate, for example? So that is going to be really important. But also, as one of the aftermaths of C19, we will see more and more more and more consumers, as I alluded to, using the online channel. How do you create a experiential journey online? And this is where China again has been at the forefront over the last 3 or 4 months of bringing a lot of physical experiences into the living room of consumers through the online channel. That is going to be really, really key. Otherwise, if you focus purely on that transactional component, online is very well suited for a transactional relationship, but experience is going to have to be reinvented in that context. Choice, I briefly touched on this, but we have already seen the trends over a number of years. On the one side, you have the platform businesses that have unlimited choice. If you take somebody like Amazon as an example, 250 million plus SKUs, you can basically choose broadly anything you want. Or you look at the food discounters in Europe or North America, the Aldis and Lidls of this world that operate at 1,500 to 2,000 SKUs, so a very curated choice. And consumers are choosing either the unlimited option or the limited option, as a very curated offer is also significantly more convenient for the consumer. Whilst at the same time, it is also operationally significantly more efficient for retailers. If you think of the working capital implications of carrying a 40, 80, 120,000 SKU range, if you think of the supply chain complexity, if you think of the necessity of having large teams purely to manage the supplier relations of a very, very broad range. And on a call with the British government and a number of retailers last week, the COO of one of the UK's largest grocers said, we are introducing the concept of the minimum viable range. We are looking at how can we, during current crisis, how can we make availability higher by simplifying our range architecture. He quoted milk as a specific example. They currently, or before the crisis, they ranged a 1 pint carton, a 2 pint carton, a 4 pint, a 6, a 8, and a 10 pint carton package size. They have now reduced that to 2 pint cartons. But our hypothesis in this context is that C19 will be a significant catalyst in reducing range sizes. In grocery, this is possible to deliver a 30% range reduction. which is something that we believe is going to happen going forward. The final point I'd like to touch on here, privacy and safety. We see more and more consumers switching to the online channel, as I've highlighted, but we are also seeing on the one side a significant decrease in physical crime, which is a very, very good message, but we've seen a rather large increase in cybercrime, and it's going to be really important for retail organizations when delivering that greater online traffic promise. They're also ensuring they are keeping the data safe of their consumers, whilst at the same time, safety, physical safety, and I highlighted the safety and well-being aspect in stores. You would have seen in many countries the introduction of queuing and limited numbers of consumers in stores. You would have seen the 2-meter social distancing rule. You would have seen plexiglass screens put up in front of checkouts to protect staff. We've also seen, and in many countries, a lot of very controversial commentary regarding distribution centres and are safety measures being adhered to in these distribution centres. So these 6 key points, in our opinion, are going to be the key drivers of consumption, and in the post-COVID world, they are going to be even more important. If we switch to the next slide, and let me speak a little bit about some specific examples we are seeing from around the world. And of course, I could reference many, many different examples, but let me start off with China. As we all know, the initial outbreak of the C-19 pandemic occurred in Hubei province, very likely in November, December, with the first reported cases to the World Health Organization at the end of December 2019. But the good news is that China is starting to return to normality. We have seen large parts of the country open up 3, 4, 5 weeks ago, and over the last 2 weeks, we have seen Hubei province and Wuhan, the capital with 11 million inhabitants, also open up over a number of days. There are, and this is really important, very significant social distancing measures that are being enforced, and my colleagues in China are highlighting this is very likely to happen until the end of 2021. So for anybody that thinks this is going to be over in a couple of months, this is absolutely not the case. So social distancing and potential re-shutdowns are absolutely on the cards. So therefore, thinking about how do you reconfigure your physical estate in the future is going to be absolutely pivotal in this context, as social distancing and the physical environment is here to stay. I highlighted that online will significantly increase, and again, as many of you know, China was already the highest penetrated online market in the world. 28% of all sales went through the online channel. If we look at the data from China over recent weeks, I mean, that number has nearly tripled. So online was the predominant channel. The difference to the Chinese online model than in a number of other markets, we see the large platform ecosystems like JD.com owned by Tencent, or Tmall, and a variety of other platforms within the Alibaba ecosystem really dominating the market. And we also see when I say ecosystem, we see all the different components joined together: payments, supply chain, social media, content, logistics, and product-specific shopping. What we have also seen, and this has been really important, that not only the government, but large corporations have all collaborated during the crisis to ensure that delivery to vulnerable people could be adhered to, but also using technology to significantly replace the physical shopping environment. You have seen, and a number of you would have seen, these type of exercises during Singles Day 11/11, where Alibaba have hosted virtual catwalk shows where you can buy online from a variety of their social media platforms, similar to Instagram, Facebook, etc. So WeChat or a number of other similar platforms in China. But they have done that in an increasing measure, where they have created more and more virtual events, where they've also had, for example, virtual shop assistants, or sorry, real shop assistants walk through stores on an online platform and help consumers choose those products, virtually put that into the consumer's basket. They've done a lot of work, and we have seen a real resurgence in home cooking. They've done a lot of work around recipe curation and helping consumers in cooking shows, for example, to directly choose all those relevant products and put them in their basket that have then been delivered through the e-com channel. But what we've also seen, and I just started highlighting this, collaboration not only through the government, but through the corporates to really boost demand post lifting the shutdown. We have seen the economic growth in China, which for many, many years has been 6% plus, come to a significant slowdown. And the government has created a number of stimulus measures, but at the same time has also heavily encouraged Chinese corporates to encourage consumption. As even though China's manufacturing sector is now broadly back to 80 or 90% capacity, the big concern is obviously the lack of exports to European and North American markets, who are still in shutdown. So even though China is producing again at full capacity, will the ports and the warehouses on the other side be open, which no doubt there will be delays. So therefore, really driving domestic consumption is a key focus. We have seen the likes of Alibaba in partnership with a number of big brands, consumer electronic brands, but also other FMCG brands, create a coupon system of over $300 million. We have seen Tencent work very closely with a lot of the SMEs on their platforms to provide microloans, etc. So these were all financial tools, but also consumption driving tools that are being delivered not by the government, but by the large technology platforms in China, where big business is helping the SME environment. And we're going to have to see, in a number of countries around the world, we're going to have to see measures that drive demand when the doors are reopened, and it cannot purely be driven through government measures, whilst at the same time I do appreciate that many retailers who would have suffered significantly during this crisis will not be able to, and will not want to, drive significant markdown offers themselves. And that is something we have seen debated very, very hotly in a number of markets. One of the worst outcomes of this crisis from a retail perspective could be if we go into a significant markdown period, clearing your stock, which of course is a problem. Take the apparel sector and take the different seasonal ranges that are in store. And if I look at Europe, when the crisis hit and the shutdowns emerged, we were coming to the end of winter, and so winter ranges and spring ranges were in store. If we re-emerge in May, June time, those ranges are going to be out of season. And even if you keep those ranges in a warehouse until next year. And one CEO was highlighting to me in a humoristic way, saying that, well, the fashion of 2020 is going to look very like the fashion of 2021, as there's probably going to be the same products on sale. But what do you do with warehouse space in that context? The next market I'd like to touch on is Austria. I'm deliberately choosing Austria as they were one of the first European markets to lift certain shutdown restrictions as of this week, Tuesday. Austria initially experienced a complete shutdown, was one of the European countries with the most stringent measures around social distancing, and enforced a 100% shutdown of all non-essential retail, and very limited essential retail was still allowed to operate. But what we have seen as of this Tuesday as the first step of reopening physical retail was all stores below 400 square meters have been allowed to reopen, irrelevant of which category they trade in. And all garden and DIY stores have also been permitted to reopen. But speaking to a number of Austrian retail leaders over previous weeks, what they highlighted, and again, I mentioned this in one of the previous slides, thinking about that recovery phase was something these businesses did really, really on. They set up strategy teams, internal teams. In one case, it was called a look forwards team, to really focus on what needs to happen during the lockdown period and what will happen immediately after opening the retail stores again. As they do appreciate there will be very likely significant changes to both business and operating models in this context. One non-food retailer created an in-store task force to assess and implement changes, and Harsha alluded to this, to planograms, to visual merchandising, both from a, we need to ensure measures around social distancing, so how can we guarantee the 2-meter distance between consumers, so how do we change our store layouts to deliver that safety promise, whilst at the same time using this lockdown period to reallocate stock. But also they have undertaken, as I alluded to, this opportunity to reduce and simplify their range and declutter their stores, and they can very easily connect that with the social distancing measures. They've also been thinking about all of their employee engagement rules. How do they interact? And this is an apparel non-food retailer. How do their store associates interact with consumers, and how do they ensure that safety is guaranteed going forward? One of the big areas of concern were changing rooms, for example. How do you ensure safety in changing rooms? How do you ensure once garments, products that have been tried in the changing rooms, how do you recycle them back into your assortment without endangering any of your staff with the virus? They are also in that context, and I mentioned that in relation to the layout plan, they've also been thinking quite significantly around SKU reduction and how can they reduce their working capital requirements. If I then switch to the UK, and the UK is currently very much at the peak of the crisis at the moment. The UK government yesterday announced after 4 weeks of shutdown, we have experienced so far a further 3 weeks with a potential of extending that even further going forward. And here we have seen many retailers in the non-essential category really focus on that react, resilience, recovery, renewal thinking. And what has really been absolutely key in that context, it really has been sort of 4 key questions that many of these businesses have been asking themselves. Question number 1 was around, what does this mean for my future business model, and what partnerships and collaboration do I need to be thinking about? What is the cost of operating my business in the future going to look like? And most retailers highlighted it's very likely going to need to be 30% less than it is today. The third point was around customer, and we've seen businesses that truly understand their customer, have the right levels of data on their customer, those that had to shut down their stores but still have an online operation, those that truly understand their customer have really benefited as they've been able to communicate with them in a very personalized and one-to-one basis. And the fourth point has been all around purpose. How do I ensure that I am doing the right thing during this crisis, and I'm communicating this to both the consumer and my staff to ensure once we come out of the other side of this, I can highlight we are a good business. Specifically within the cost of doing business point, I've mentioned range reduction in a number of examples. Property is another really, really hot point. In the UK specifically, many retailers are feeling that they are taking a lot of the pain if their stores are closed, whilst at the same time, they feel that landlords are taking limited or no pain and are at best offering rental referrals and are not offering rental holidays or a complete write-off of rental rates. So it's a very hotly contested topic, and in that context, we will very, very likely see the demand by the retail fraternity to shift from quarterly rental payments in advance to monthly rental payments in arrears based on turnover related fees, and the number that many retailers are talking about are 5 to 10%, in the range of 5 to 10% of your turnover. That is the amount of rent they're prepared to provide. So an end-to-end review of the future real estate model is going to be really, really key. I am hearing many retailers, and this will be different in a market like India, where we're still in a growth phase for many organizations in opening stores, but in many more mature markets like North America, like many countries in Europe, we are overspaced, over-retailed today, and the output of this crisis is very likely going to mean a reduction in physical space by 25%. The change of the rental model I just alluded to. And what we have been doing in KPMG has been looking at these 4 phases and looking at specifically in the recovery phase, what does this mean from an operational, from a financial, and from a commercial perspective for retail businesses. And across Europe, we have started a number of workshop sessions where we look at, by function, what is the impact for retailers going to be? What changes need to be addressed for the property department, for the HR department, for the finance department, for the store operations department, to really start thinking about, within resilience, but more importantly, within the recovery and the renewal phase, how your organization is going to look in the future. I'm going to pause here. I know I provided a lot of content here, and I'm going to hand back to Harsha.
Paul, thank you. I think we can open it up to questions from the attendees. We already have one, and perhaps I pose that to you first. While we can have people who want to ask questions, they can raise their hands and